y'all, it's Tori Willis with the Willis Realty Group at Executive Texas Realty. We have been asked repeatedly and repeatedly what is going to happen if I wait to buy a home when interest rates drop. So I have a special guest joining us today on our video of the week. His name is Grant Ehli. He is an amazing mortgage professional. So if you have any lending questions, he is a great go-to to answer those questions. But I do want to give you a warning. This video is a little bit longer than what we're used to recording for you guys, but it's jam-packed with tons of information. So stay tuned, watch this video, get to know Grant. He is going to just blow your mind with what is gonna happen when interest rates drop. What's gonna happen to the market? What's gonna happen with your money? Here we go.
Hey there, Grant Ehli with Legend Lending in the Woodlands. I'm super excited to bring this presentation to you guys as it contains a lot of great information and knowledge. So this is in regards to when are the rates going to drop? Everyone wants to wait for the rates to drop, but we're going to look at the numbers here and we're going to see why it may or may not be the right decision for you. There's a recent study that came out in regards to the current interest rates in our real estate industry right now in Texas. And the results of this study showed that statistically speaking, if the rates were to drop to about a 5.5% rate, about 70% of the buyers, mixed in with sellers, would get back into the market. So that's going to create a huge windfall of people coming back into the market. Now we all saw what that caused in COVID. So we know what that's gonna create. It's gonna hike up prices of the properties, which is great for sellers. That means your property is appreciating. Absolutely nothing wrong with that. But let's take a look at how that affects our buyers and waiting for the interest rate drop.
So let's take a look at today's rates and today's numbers. So we got a purchase price of $500,000 and we're putting 20% down to bring it to a loan amount of $400,000. With an interest rate at 7.5%, we're looking at a payment basically to round up around $2,800. Now, when the rate drops 1%, to be conservative, we're going to give the property a 5% appreciation. So we're looking at $525,000 in purchase price. And when you do the same 20% down payment, that brings the loan amount up to about $420,000. Now, as previously stated, we got 1% off the interest rate as they dropped. So we're at a 6.5% interest rate. But as you look down here, the payment only dropped about $140 a month. Now, this is because the loan amount went up with the purchase price because you're doing the same percentage of down payment. So there's really not many savings here. When you're looking at things from a long-term perspective, in order to make that savings up, that $25,000 that you paid extra for that home, it would take you about 14 years in savings from that $142.17. It takes you about 14 years to make up that $25,000. So now let's take a look at if the rate drops 2%. So the rate drops 2%. I mean, definitely we could see a 10% appreciation on those properties. Might even be undershooting it there still. So looking at this, we have a $550,000 purchase price. Same 20% down payment, brings it down to about a $440,000 loan. With taking 2% off of that 7.5 interest rate, we're at 5.5, bringing your monthly payment to, just for sake of numbers, $2,500 a month. Now, when we look at these savings, that's $300 a month in savings. That's not too bad per month in savings. But let's go back up top here. You paid $50,000 extra for that home. So to make up that $50,000, it's crazy, but you're basically looking at about 14 years again. That 14 years is really kind of the magic number. You know, it's interesting how it takes that long to make up that money. Now, this fourth option here, this is really the bread and butter right here. And what we're going to do is mostly compare this option to if you waited for the 2% drop, because this is where you really see the benefit. Now, let's say you bought this home today at the $500,000 purchase price with the 7.5% interest rate and your payments at $2,800. When these rates drop to the 1% or the 2%, I have this formulated out for the 2% rate drop. So when the rate drops to 2%, you can refinance. So what we've done is we've got this purchase price here at $550 because that's what it's going to value at when it drops 2%. So you'll be at $550 for your home value, and you will have already made payments into your equity. So we're estimating around $390,000 on the loan amount, give or take. At the 5.5% interest rate, look at that, $2,200 a month in a payment. That's $582 in savings from what you purchased originally. Now, like we said, we don't know when rates are going to drop, right? But this could be a year, this could be 2 years, this could be 3 years. But then you're not waiting for 3 years paying rent. You're already building up equity. And when you refinance, look at these savings, $582 a month. That's huge. Now let's take a look at this. We kind of briefly looked at that here. We got the monthly payment difference. Now look at this, is really great. We got savings over 5 years. Over 5 years' time, you're going to save almost $43,000 with refinancing when the rate drops 2%, rather than waiting to purchase at the 2% rate drop. And then this right here, this is the bread and butter. This is where you really need to pay attention and take a look at this. So as we look at this here, your original, if you purchased today that $500,000 home with a 7.5% interest rate, in 5 years, your net worth in equity would be $201,000. That's great. That's really great. Now, if you purchase when you have the 2% rate drop, you'll have a little bit more, but you're behind. You're going to see an increase of about $29,000 in your equity, but look at the refinance option. You could go from $201,000 to over doubling what the 2% purchase price is when the rate drops, double that equity when you refinance. I mean, that's amazing. So what this comes down to is if you have the affordability, the availability, and the comfort of purchasing now. As you can see here, the numbers are giving us a clear indication of what might be the best option for you.
Now that we've taken a look at that, numbers are numbers and math is math. So that's one of the great things about the universal language of numbers is they don't lie. So what we're looking at here is a pretty great estimation of what kind of numbers you may be looking at. So the other component we need to talk about here is your affordability and your comfort. So you need to put yourself in a situation that you're comfortable in. We don't want anyone in any kind of situation where they're not comfortable. You need to be comfortable financially and with your family at where you're at in this property, and that is what we're here for. We want to take care of you and we want to do what is in your best interest. So if you need numbers or wanting to look at a property and you want to see what that might look like down the road for you, reach out to us and we'll be more than happy to help you out. Again, my name is Grant Ehli with Legend Lending, and I really look forward to talking with you soon.